Are you struggling to grow your small Forex account? And while doing that, you have blown many accounts? Well, I've been there, I've done that. So that's why in today's video, I'm going to give you my ultimate guide and an actual guide on how you can grow your small Forex account. Now, many people, when they try to grow their small Forex account, what they do, they think that, let's say that they are starting with the $500 capital, and they think the easiest way to grow the $500 account into $5,000 or $10,000 or $20,000 is that they have to risk 50% of their account size in one single trade. So they end up risking 50%, which is going to be $250 amount in just one trade. Now they end up making profits on that first trade, and they think that all right, they risked $250, and on that trade they end up making like $500 profit, and they have already doubled the account from $500 to $1,000. So what they do, they keep doing that until they end up blowing the account. Let's just say that they have reached $1,000, and when they reached $1,000, now they're going to again risk 50% of that, which is going to be $500. And in case if they happen to lose this trade, they are back again to the account from where they started. And not only that, emotionally they are messed up because they grew their account from 500 to 1000, but now it's back to 500. So they're gonna start over trading. When they're gonna start over trading, what's gonna ultimately happen? There will be no trading strategy that they're gonna follow, and they will end up chasing the market. And as a result, they will end up losing the account that they wanted to grow in the first place. Now, many traders, they think that's the way to grow by risking 50% of your account in one single trade, but that's actually not the way. I'm gonna give you the actual way on how you can grow your Forex account, whether you're trading a $500 account or a $1,000 account, any account that you want to grow with the proper risk management system that I am going to share with you, the proper guide that I'm going to give you, that can be done easily. Now, the number one mistake that I want you to avoid, let's say that you're going to start with the $1,000 account. What you need to do when you will be looking to take the trade, always make sure that you only take the trade that is going to give you at least 1:2 risk to reward. Now, what do I mean by that is, let's say if you're trading a $1,000 account and you're risking 3% on your account, make sure that when you're taking the trade, the end result is going to be at least double the amount that you're risking, which is going to be 6%. That way, you need less winning trades to be profitable. If you have a trading strategy that works between 50 to 60% of the time, but your risk to reward ratio is good, it's at least 1:2, then after 7, 8, 10 trades, you will still be profitable because whichever trade you're going to take, you're going to lose only the amount that you're risking. But whenever you are making profit, you are going to make double the amount that you're risking. That's the importance of risk to reward ratio. So the number one mistake that I want you to avoid is to find the higher probability trade setups, avoid low probability trade setups, and also do not take any trade that does not give you at least 1:2 rewards. Now, personally, what I do, that I always look for an opportunity that at least has 1:3 rewards. So that way, at least when I will be making profits, I will be making 3 times the amount that I am risking. Now, here are 2 examples. The first trade on gold on 1 hour time frame, and the second trade on gold as well. Now, this trade, what you see, that let's say that you're taking a trade from this price level. When you're taking a trade, you're only expecting to make 1 rewards. That is going to be whatever amount you're risking, you're gonna make the same amount. That's a bad example. That's a low probability setup for me. And also it did not have enough confluences because market, when surge came down, it was still very bearish. However, on this other hand, you look at this opportunity when you see that market is pulling back, and right after buyers, they went up higher than the 20 period moving average that we have here, and they started to stay above it. I entered the trade and look at the risk to reward ratio. It's more than 2.5 rewards. So that means if I risked $100, I made $255 from this trade. That's a good example of higher risk to reward ratio trade. And also I had enough confluences because sellers, they were taken out from the buyers when they came higher than the 20 period moving average. So make sure that you always look for an opportunity that gives you high reward, and also that trade is a high probability trade. Because this is the common mistake that most traders make. When they don't see an opportunity, they just simply decide to enter into the market without any trading plan, and as a result they end up losing. So make sure that you do not make this mistake. It's very crucial. Now, how you're gonna grow your account from $1,000 all the way up to $10 or $20,000. Now let's talk about that. So I have made this plan for you. Let's say that you're gonna start your account from $1,000. I want you to risk only 3% and only 3% on every single trade that you're gonna take. And every trade that you're gonna take, your expected return from that trade should be 2x, which means 6%. So if you're gonna start with $1,000 account and your risk is going to be $30, which is 3% on a $1,000 account, that means your expected profit is going to be 6%. So if this trade goes and hits your take profit, what will be your ending account balance? It's gonna be $1,060. So once it is $1,060, the next trade that you're gonna take based on this account balance, which is $1,060, and you're gonna take 3% of this account on your second trade. Let's just say that if you're gonna lose, how much you will be losing? You will be losing only $32, and after that you will still be up $28 overall on your account. So if you lose the second trade, what I want you to do on your third trade, after losing the second trade, only risk the $28 that you have on your account balance. And again, look for 2x the amount that you're risking, which means 2 rewards from that trade. Now, after, let's say that your second trade also goes in your favor, you will end up making $64. And at the end of 2 trades, your account balance will be $1,154 and $55. Now, on this account size, you're gonna again risk 3%, and you're gonna keep doing that as long as you're getting proper trade opportunities. Now, what I want you to do that after each account balance is reached, I want you to mark done. That means you have achieved level 1, which was this number of trade. Once you achieve the second level, then I want you to mark it done so you know which level you are on right now. And I want you to keep doing it. And not only just I want you to randomly take the trades, make sure that you're trading with a proper plan. You have developed a good trading system. If you do not have developed yet a good trading system, I have added dozens of videos about different forex strategies on my channel. Make sure that you watch them all to have a better understanding on how you can develop a proper trading strategy that's going to give you 60-70% of the winning percentage. Now, after every level, when you will be marking it, look how your account is going to grow based on this simple 3% risk rule. After your third profitable trade, you're going to be at $1,259 balance, and it's going to take you 9 trades if you keep making profits, which is not realistically true. However, we are talking about when you will lose, you will simply just go back to the previous level, and you can risk the amount that you risked in the previous level and can come back again to the next level, level 3, level 4, or level 5. Now, after 9 consecutive wins, let's say, your account will be doubled. It's gonna be at $2,112. Now, understand, it's gonna take you 9 consecutive wins to go from $1,000 all the way up to $2,000. But from $2,000, it's only gonna take you 5 trades to go from $2K to $3,000. And it's gonna take you only 8 trades to go from $2,000 all the way up to $4,000. And if we just continue this, let's say from this number, if we continue it, after your 27th trade, you will have approximately $10,000 in your account. Now that's basically level 27. I'm not saying that you're gonna make profits in every single trade and you have to make profit in every single trade, because trading doesn't work like that. It's a game of probability. Sometimes you're gonna make profits, sometimes you're gonna lose profits, and you have to accept your losses if you truly want to become a profitable trader. However, this approach is realistic because whenever you're gonna lose, let's say that on level 10, when you have $2,112 in your account, you risk $63 and you lose that trade, what's gonna happen? You're gonna go back to level 9 and I want you to risk then $58 until you come back up at level 10, and then again on level 10, you will risk $63. Now, personally, I have tested this risk management sheet over the years and I was able to grow my $2,000 account, because I started with $2,000 all the way up to $17,000 before I just went down from 17K to like 13K, and I ended up making a withdrawal of $13,000. That's the power of compounding. when you will reach level 27, you will turn your $1,000 account into $10,000 account. And you know how many levels it's gonna take you to turn $10,000 account into $20,000 account? You wanna see that? Let's take it down. And you can have an idea that from level 28, when you're gonna start trading on a $10,000 account, if you keep making profits, it will take total 8 levels to turn $10,000 all the way up to $20,000. I'm not saying it's going to take you 8 trades because there will be some losing trades. That's why I'm using a word level. So from $1,000 to $10,000 in 27 levels, and from $10,000 to $20,000 in just 8 more levels. That's the power of compounding, and that's how important it is. If you stick to 3% risk per trade and you make sure that you're getting at least 2x the amount that you're risking, and also you make sure that you're always waiting for the right opportunity and you're only taking the trade which has higher probability of going in your favor, then it's super easy to grow your small account into 5 figures account. And I have personally done that as well. After when I tested out with multiple different strategies, I ended up blowing my small Forex account because I was trying to flip the account again and again. But with this simple risk management strategy, you can easily do that. So the risk management needs to have following: how much money you're going to be risking per trade, your expected return, and your risk to reward ratio, which is very important. The next thing is that you need to be disciplined trader to turn your small account into big account. It's not going to be any luck that you're going to simply just be turning $1,000 into $10,000 after every 2-3 months. Luck isn't going to play any role in your trading success. You have to make sure that you are a disciplined trader. You stick to your trading plan. You never risk too much. You never go more than 3% on every trade. You never overtrade. When you have 2, 3, or 4 consecutive losses, you do not just start to overtrading by thinking that you have to make your money back and you start revenge trading. So never overtrade. That's the good trade, successful trade of the disciplined trader. And the next is, every single trade that you're going to take, make sure that you journal that trade so you know what are the things that are working for you, what are the things that are not working for you, and when you need to take a step back. The next thing comes is, stop flipping your accounts the way I told you, that you start with $1,000 account and you decide to go with 50% of your account balance on one single trade. And you decide that, okay, I'm going to turn $1,000 into $2,000 in just one single trade. That's never gonna work long term. We are talking about the long-term success. You may get lucky and that trade goes in your favor and you turn $1,000 into $2,000. However, it's not a sustainable model. That's why I made this sheet that, let's say that you're starting with the $1,000 account. It's a small account. What you do after 2 trades, you have doubled the account. But after 6, 7, 8 trades, I can guarantee that you will lose your account that you flipped from $1,000 all the way up to $2,000, because you will get that ego that, all right, I turned $1,000 into $2,000. I'm going to turn $2,000 into $4,000, then $4,000 into $8,000. Then what's going to happen? 2 or 3 consecutive losses are going to wipe your account. And that happens to every single one of the traders. I can guarantee that happens to every single one of the traders out there who try to flip small accounts. So stop flipping your account, because you're gonna always end up blowing your account. And you're gonna stuck in this loop of keep losing again and again. Many gurus out there online, they just show you that they are turning $1,000 into $100,000. But trading does not work that way. Try asking them, do they have proper trading track record? Proper record where they have made consistent profits? I can tell you that they will never answer you that they have any track record, because they do not. So do not flip your account the way you have seen some fake gurus doing that online, and use the risk management system that I shared with you, so that way you can have higher chances of growing small account into big account, and that's the realistic approach to grow your account. So that's the video that I wanted to share with you. 4 different things that I gave you that can help you grow your small Forex account. If you have any question, you can ask me in the comment section. And that's it from this video, guys. Thank you so much for watching until the end. I will see you in the next video. Bye for now.